Now, as an investor, if you've invested in a company that achieves scale, and somebody else comes after you and invests, automatically you're going to make returns. So actually, it's all about thinking about backing an entrepreneur. See, risk is high in these sectors in terms of execution risk. And innovation is there not only in terms of IP, though you of course have companies where this company that Satya mentioned, must have a patented technology or something. But most innovation is there in terms of pricing strategies, distribution strategies, financing strategies. So if you have a great product, but if your target consumer is not able to actually pay you upfront and buy it, how do you innovate? And there's nowhere to copy from. India is the market leader right now in impact investing. So every company is doing something extremely pioneering. Couple of examples I'll mention. One, we have invested actually in the skills training space. They are training informal sector workers, construction workers, plumbers, electricians. These are not tapped by anybody, right? And they're working with corporates like your construction companies. They're working with companies like Bosch and Schneider, who are actually recruiting the trained workforce from this company. And so they're getting paid from the corporates, they're getting paid a little from the students as well, and they have grown their top line over 50 times in the last 2 years since our investment. It has, again, really, done really well, and they're across a few states now in India. Another company I'll mention that has actually raised capital starting from impact investors, it's in the water business. Now, water is one of those sectors which not many people think, like, how can you invest into the water sector? He's providing clean drinking water to rural areas, and it's all about just finding what is the price that your customer can pay, and then how can you design your business model in that the cost that you bear is lower than that price. So you have some margin. These guys are considering bottom of the pyramid as a 21st century marketplace. That's the way they're thinking about it. So he's selling water, people pay 20 paisa per liter. This guy has been invested by 2 mainstream investors that don't call themselves impact investors after an impact investor started first investing in them. So when there is scale, there will be people investing further rounds after the initial early investors, and that's how you make your money back.
Good. Thanks, Aditi. I think these are very good examples to extrapolate further, and this could be in various sectors. When I was talking to John in the waiting lounge, and he was mentioning that, John, in your Magic Bus model itself, you are trying to now expand it to bring it to social impact space. And so how you blended your philanthropy? I'm again repeating the question, but just how you blended that from philanthropy to social impact to seek the larger pool of capital coming into you?
Yes, as you interested investors out there look at the opportunities and the potential for your investment, you'll find these present themselves from many different sectors. One of them is charities that are themselves in motion and are learning to adapt their models. Magic Bus is one such example. An organization that has grown from a single-person startup to a mature program running across India and some international territories with 350, 400,000 children in the program. The nature of the program isn't actually so important for this brief panel. The point is that Magic Bus is successful, and it's always had an open-minded view to funding models for growing its program. It's always concentrated on children, and it's always stopped at the ages of 14, 15, 16. More recently, the opinion has been expressed that we could tap into alternate sources of finance to grow the program beyond that by opening up a part of the program that we would call livelihoods. So this would pick up Magic Bus children from the age of 15 and 16 and would then take them through the ages of 16, 17, and 18. While they're children in the program, they are taught life skills, they're mentored in life skills, how to manage the challenges of their lives. When they get to the livelihood program, 15, 16, 17, 18, then they get taught employment skills, how to present themselves as good workforce, good labor, good candidates for employment. Right at that point, we find that already industrial sponsors are interested in cooperating and collaborating with Magic Bus because they see the value in maybe assessing Magic Children youths for eventual employment in their businesses. We're now taking that one stage further and starting to say to corporate donors, we could be corporate co-investors. We could provide the program, you could finance the training institute, and you might be able to make a return out of the training institute. On top of the financial return, we'll show you how to measure the social return. So you will end up with a blended social and financial return on your investment. It's an example of how there are many different players. I'm proud to say that Magic Bus is one of them.
Yeah, thanks, John. So I think there are enough examples of bringing the philanthropic pursuits in a business environment and still creating the social impact without compromising the returns to a substantial extent. Although very often it's being construed that social impact has to be more focused on social impact and less on returns. But at times, it may be possible that you get both of them. At times, it could be a little imbalance here and there. But I feel this is something, and I can share our own experiences working with good number of families. I think most families today, ultra high net worth families, have got one or the other foundation or charity involvement. Family members are enrolled in supporting one or the other social cause. Very often they've supported good amount of philanthropic activities, sometimes disclosed, sometimes they still consider that Gupta Dan, they don't really make it so publicly available for us to really do that kind of analysis. But they are now realizing the potential of a different kind of philanthropic pursuits where they can create a larger impact by bringing the business model far more sustainable, far more scalable. At the same time, they are not compromising on the capital because they are not giving away the capital. They are still seeking return on the capital, however small or big it could be, but then they are expecting the capital to stay put with them. So what typically happens with social impact, and most of these families are actually looking for a larger pool of allocation than what they would have allocated from philanthropic pursuits. So we as an industry has got a role to play in diverting some part of their philanthropic capital to social impact and some part of their business capital to social impact businesses. And I think that can bring lot more capital to social impact investing than what it is today. As a rule of thumb, we often tell people that in order to make your wealth to stay with you, our tradition says that 10% of it should be given for social cause. To make the Lakshmi stable, to make it stay put with you for longer time, to inculcate the right value system, to purify the wealth. In whatever religion, whatever belief you have, there are different formats to finally put that structure around. But what typically happens that percentage starts very late in life. Through social impact investing, it can start a little early, where you are actually imbibing as part of your investment right from early days. And hopefully some of these social impact businesses will bless you in a different kind, not only making your Lakshmi sthir with you, but also grow because you got a lot more blessings associated with it. Before we get into any further questions among us, maybe I would like to open the floor for any questions or anything you would like to ask the panelists about. There is
Difficult to see against the lights, isn't it?
Over
if
there.
you can, yeah, there.
Over there. Yeah.
How close are we to having clean fuels being used in cars? Because that is something which is, the cost has increased a lot today, and that would have a large impact around the world, and in India it would be significant. So,
how close are we to on the cleaner fuel for the auto industry?
Sure.
You any?
Any
well-
thoughts or idea on that? I mean, I think it would include social impact investing. I mean, it would.
Yes, so I mean,
Qualify?
I don't have a comprehensive answer, but yes, we have actually seen a bunch of startups that are working on not maybe clean fuel, but hybrid electric technologies. Of course, you have the larger auto companies also working on them. So I don't, to be honest with you, I don't know how close we are, but yes, we have seen a bunch of even startup business ideas coming out of the various technology institutes working on these ideas.
So first and foremost, let me take this. First and foremost, this is definitely falling within the social impact investing space. So if any one of us have got any idea about a business like this, which can, I'm sure this is one venture which definitely needs funding, if at all they need it. But I think there is a lot of work happening in the space. Just tell you, recently we have come across some firms in Bay Area, and they have worked on this technology. But I think still it's a lab stage. It is not yet come to a level where we can call it pilot. Okay. So typically most of these ideas move from lab to pilot, and then they are brought to commercial scale. We are at phase 1 of it. Phase 1, it has been successfully demonstrated. Phase 2 is still, I would say, at least a couple of years away. But we are not far off from that.
That's right, Tesla. I've
Could
heard of Tesla
actually
too. Yeah.
open up a whole lot of things where across the world cars could be cheaper, electric cars. So that could solve
Yeah.
Yeah.
the problem.
Yeah, I mean,
So-
I have heard of Tesla. Yeah, so I was just wondering.
Sorry, there is a gentleman.
This is Ipshit from
I'll comment on this.
Can you hear me? Yeah, this is Ipshit from Centrumville. I wanted to ask a question. And
Can you
that
take
is-
it, hold it little closely? We can't get it.
Yeah, can you hear me now?
Yeah.
Better? Yeah. So this is Ipshit from Centrumville. I wanted to ask something. That the perspective in which we are progressing with this discussion, I understand the regulators, SEBI, allows social impact or companies which can have a positive social impact under category 1 AIF, right? What I want to understand further is that how this discussion can align with the larger scheme of discussion we were having since morning. Like Mr. Choksi in the morning indicated that families are bound by values and not by money. And if philanthropy and social impact investing is about creating values in a family by the promoter or the settler of a trust or whatsoever, so then how and where does it fit in? Because a lot of families would have their own customized inclinations onto what kind of philanthropy or social impact investing they would want to do. It cannot per se be structured. And if a structured proposition has to be provided, what would happen about the regulation and the regulatory perspective around that?
Yeah, thanks. Aditi, would like to take it?
Sure. So I didn't understand what was the exact question there,
So
but
it's-
So the first,
Yeah.
I'll break up the question in two parts.
yeah.
First part is the way we are talking about social impacting in terms of generating returns out of it. I think AIF category 1 is already there, which provides for a route to do social impact investing.
Yes.
However, if philanthropy and social impact investing were to be done for the sense of creating family
Value
values
system.
within a family
Yes.
office
Yes.
system, then every family would have its own ways and means and preferences of how to create those values or how to go about doing social impact investing or philanthropy,
Yes.
right? Can it be structured? And second question is, if it can be structured in a productized format, then what would happen with the regulation around it?
Yeah.
So see, in the, yes, you're right, it comes under the AIF, the category 1 funds that's set up. And in fact, even in the CSR bill, social businesses are mentioned, even though we're still waiting for a clarification as to, if social enterprise actually qualify, because they haven't defined social businesses. When families are thinking about it, and families and family offices are no different than any other individual investor. Everybody has their own value system, and like Satya said, everybody has their own definition of impact. Some people are sector agnostic, some people are more focused on health, and some people on education. I met a gentleman earlier today who specifically asked about orphanages. They need to see the whole variety of options that are out there for investment. In terms of structuring, it usually falls into an alternative or a private equity sort of in terms of asset allocation. And it can also fall into, in debt. And it can also fall, it can fall into various categories in terms of instruments, but you look at it in terms of private equity investments. But yeah, there are various options across various sectors, and so they have to initially pick and choose the opportunities, or they can invest in a fund as well. So that's another instrument which they can invest in, which then invest directly into the entities.
Okay,
So that could be
let me just add on to what Aditi said. It's more of a structuring part of it, whether it falls into AIF and what category. But let's address the larger issue, which I think you might planning to address, is that how do we connect the social impact investing space in the core of the family office or core of the family, whatever you want to do. See, you meet most of the families, and there would be a couple of things on the mind of the founder. How do I transition the values from my generation to the next generation? Okay, that's always. So very often you will see most of the wealthy family kids working in charities, whether they like it or not. Okay, they will work for some charity, at least summer vacation this time or whatever time they get it, they work for charities. Now whether they like it or whether their father like it or mother like it, they have to work. Okay, and second thing, very often these fellows actually go and start spending their summers in the business. Okay, just to understand what the business is all about, whether their own business or somebody else's business. Because they need to be inducted in two things. One is entrepreneurial DNA, and second is human values DNA, whatever the family values DNA. And the family constantly struggles to get them somewhere so that they become better than what possibly their forefathers were. And it's a constant struggle. Social impact is an answer for it.